Hey, audio check, please. Happy Sunday. Happy Sunday from a beautiful, excuse me one second. Happy Sunday from a beautiful day in the Northeast. I have to say, it was gorgeous. What we're going to talk about today, futures action. I'm going to throw a curveball. It's complete opposite of where I thought we were going to go on Thursday evening, the last time we met. I think we're probably going up higher. We're going to talk about why one day made a difference last week. And that's what I always say on Thursday Night Stock Charts Live. We'll go over the weekly charts. That, however, is one day can make a big difference. And in this kind of market environment, you can have the courage of your convictions, but that can be a fault at times. So I'm never ashamed to say I have a conviction of one direction or the other. However, long term, short term, and short term, I think that we're probably going to move up higher. We are a bit extended intraday, but the daily charts, the weekly charts imply that we're probably going to see some upside here. We're going to go over some headlines. It was a really quiet weekend, nothing really to rattle the markets. I have a couple of charts that I'll go over from the Federal Reserve showing just how much lending is going out to not just the small regional banks, but to the money center banks as well. So they're bailing out these banks, and we're going to re-review the Federal Reserve's balance sheet. It's skyrocketed over the past 2 weeks after declining for net the past year and a half. So to a certain extent, we have QE back. How far it'll go? Well, the bond market's saying we're going to get multiple cuts this year in interest rates. That runs counter to what the Federal Reserve chairman had to say the other day, where he said he does not predict rate cuts in 2023. Bond market usually wins that fight. So let's go to say hello to folks. We're going to let the futures action settle down a little bit. Hopefully I'm being heard and I'm not on mute. Pedro. Hey, Pedro. My website is down. It's not going to be up until tomorrow. So 30-minute chart club will resume next weekend. Okay. Trader Isaac. Hello, Bob. Yes. You're in South Jersey. You are. Cool. Very, very cool. That's awesome. RB, hi Bob, happy Sunday. Can you go over coin, please? Yeah, I think I forgot to go over that one the other day. And you had a question related to coin as well. I forget what that question was. I got to write it down so I don't forget. Okay. We have Mr. Pete. Hey, Pete, welcome. My mouse is being wonky. I can't get the hour to go where I want it to, and that ticks me off. Jeff, thank you, sir. Appreciate it. Come on, mouse. Tim, hey, Bob. Great day here in Florida, too. Awesome. Awesome. Yeah, I missed it. I liked it down there a few days ago. And there he is, the man, the mission, Talon. Now all we're missing is Franklin, and the gang is all here. And let's get it going. Let me share my screen. We'll talk about the opening futures action. I've been watching it for the past minute or so using my peripheral vision. Clark, hey, at least DB didn't go under over the weekend. Yeah, you know, they were going to do the same thing with DB as they're going to do with Credit Suisse. These banks are not going under. It's still they don't want to take the medicine. They don't want to do. We're going to do it someday. We're going to do it someday. It's going to be worse. Dane, hello, sir. Joel, hey Bob, looking forward to All right, you got it, pal. Thank you. Paul. Hey, Bob. Paul, hello. TZ Burton. Hey, Bob. Hope you had agree with. I did. Thank you very much. Same to you, and same to everyone out there. And right from the outset, if I could ask you to hit the like button, subscribe button, you know the deal. And let's get to it. Let me share my screen. And that's not sharing my screen. Mark. Hey, Bob. Tuning in from Delaware. Cool. Really enjoyed. Thank you very much. Appreciate that very much, Mark. Okay, let me share my screen. We have the futures open, and we will get this ball a rolling and begin the new trading week. Okay, right off the bat, this is just my standard charts. Looking at the E-minis on top, 10-year yield lower left, 10-year yield right off the bat, spiking up higher. I did not expect that. Uh, dollar is about unch. The dollar's slow to open. Actually, it's down. Dollar's down, gap down. And we have the volatility index. Come on, mouse. You know what it is? The live stream generates so much power. Not generates. It takes up so much power. It affects the mouse, believe it or not. And as soon as I end the live stream, mouse goes back to normal. Okay, so VIX down, S&P's up. No great shock there. How much are we up on the S&Ps? We're above 4,000. We're up just shy of a third of a percentage point. We were a little bit higher. These are 15-minute charts. This candlestick you're seeing here, let's go to the big chart. This candlestick that you're seeing on a 15-minute bar is an outside reversal bar, or also known as a bullish engulfing bar. Folks, if you're not familiar with the terminology I'm using, there's a link below, 5-part video tutorial on my top 5 favorite candlestick patterns. All you need to do is enter your email address. We hate spam too, and it's free. I just want people to know the terminology I'm using, so that way you come back and you learn something, hopefully, if you're new to trading. Or if you're an investor and you don't know technical analysis, which is fine. We'd love to have you here. All right, so outside reversal bar, bullish. It looks as though we are going up higher here. Let's check in with the Russell 2000. Same bar, outside reversal bar, up spot 4%. And before we move on here, let's put things into context. We are extended. We are very extended in terms of duration of this rally on an intraday basis, meaning I would not chase this market up higher tomorrow morning. My guess is that, sure, we can open up with strong futures, but we're going to get an intraday pullback tomorrow. Then might be a better opportunity if you're looking to put on long bets to take advantage of that rally. Because take a look at your stochastics. We really went overbought back here. We haven't closed down below on a 15-minute chart, down below 20 since what day is this? The 24th. So that's rare. Actually, that was Friday. So normally you get a couple of visits above 80 and below 20 a couple of times a day, and you're not seeing that right now. So we're extended here, and we're extending gains. This is a very strong open. I guess it's because it's a little bit of satisfaction that there aren't any headline risk out there. The NASDAQ also extended here. The NASDAQ outside reversal bar, bullish engulfing, rallying exactly a third of a percentage point. Looks as though it wants to move up higher. Let's get rid of all these old drawings. and we're flirting with the upper band of the rising uptrend channel. Again, I think that they may gap this market up tomorrow morning. I'm not going to be the least bit surprised to see them do that. If you're looking to get long, wait for the retracement. You're going to get one. Dow futures, another outside reversal bar. Again, very extended here intraday. But really, it's a one-sided action so far. 1 minute chart, no downticks here. Very strong price action at the open on all of these charts so far. Taking a look at, I went over the Russell, went over the NASDAQ, went over the E-minis. Let's take a look at the US dollar. Then we segue over and into commodities. The dollar is clearly gapping down here. You can see that it's holding the 50-period moving average on a 15-minute time frame in purple. Moving on to gold. Gold did not close above 2,000 last week, but it spent a good amount of time up there. You're seeing a pullback at current. I'm kind of surprised with this movement. They initially moved it up higher. Now they've reversed it to go lower by spot 4%. So how do I interpret this with the dollar down and gold not up? I think that this is money rotating out of gold and into technology, into equities. Remember, money moved into gold because of the bank issue. We don't have that headline risk anymore. Let's go to protein futures, hogs first. Go to a weekly chart. Prices are really coming in here quite a bit. That's good to see. Live cattle futures, they had broken down 2 weeks ago. And last week, they managed to flash a bullish key reversal bar, meaning we had broken down, we had formed an upper band of resistance, but last week, bulls were able to rally cattle futures back and above resistance. So it looks as though the path of least resistance may be resuming in cattle futures to the upside. Not what I want to hear. I love my New York strip, and it's expensive. It's expensive. Let's stick with commodities. I forgot to go over silver. We'll go back to silver. Home heating oil, moving lower. Nice. I got to call in an oil delivery, take advantage of these lower prices. Let's take a look at light sweet crude. Light sweet crude, this is a weekly chart. Now, last week we had a up week, and this week, this is reflective of this week's price action so far. They're gapping oil up relative to Friday's close. We don't have a new weekly higher high, but this is a fairly strong open for oil. Now, what I want to know is, do we put in new weekly higher highs? Now, why is that important? It's important because, this is a market that has decided that the Federal Reserve is back in the QE business. They have completely said, we're not going to pay attention to inflation. Inflation doesn't matter. That's probably why they're going to take this market up higher. But if oil begins to put in new weekly higher highs, what's more inflationary than oil? Oil is extremely inflationary. Now, you may be saying, well, the Federal Reserve backs out food and energy when they look at energy. Okay, that's fine. But what they don't back out are the input costs. The input costs that manufacturers have to absorb and then pass along to the consumers that are generated, that are inclusive of oil derivatives. So oil is extremely important, and not enough people pay attention to the impact that it has on inflation data. We never lose sight of that. So we always want to have a pulse check on what oil is doing. Let's check in with agriculture. Corn, wow, corn, good price action here. Corn price is moving up again. Again, these are weekly charts because I don't look at them all the time during the week. Soybeans broke down. Lower high. Let's talk about this for a moment. This is a significant event. So we have a double top, and soybeans will officially be in bear market territory should we break down below this support level. Perhaps that's a little bit hyperbolic. It'll be in correction territory. Okay. Wheat futures have been very weak. I think my slider did not. Yeah, there we go. All right, so what they're doing here is they're consolidating wheat. Ugh. You can see that they have it right between a support level and a resistance level. We'll see who wins. I think bulls are going to win this by breaking it out. Ten-year notes. These are bond prices. Bond prices are moving up higher. They were driving yields lower, but so far this week, we are down. I guess it's because we have resistance immediately above at the 50-period moving average. So a little bit of pressure on bond prices, and yields are moving up. As you can see here, lower left, 10-year yield. Let's go to the big chart. What's that symbol again? 10Y. This is a weekly chart. Wow. This is technically a breakout on yields, because what we did 2 weeks ago was we broke support right here. This is on the Silicon Valley Bank and Signature Bank, all that nonsense that was going on, and still not fixed. So money moved into bonds and yields dropped. Now, it appears as though money is now beginning to come out of bonds, at least in the short term, and that is driving up yields. But that money is finding its way into the stock market. Now, let's take a look at silver, which I skipped over earlier, and we own a lot of it. Silver broke out last week above resistance here in red. Let's change that to green. This is like a secondary breakout. Our primary breakout point is up here at around 24.25 the ounce. So silver at current is down on the session, pretty significantly down just shy of a 30 percentage point. The reason why I say it's significant, the price action is just terrible. That's an outside reversal bar. And now it looks as though we're going to get a follow-through candlestick to the downside on silver. Whenever you get an open up, the next candle into the wick, generally the trend continues. Okay. All right, let's go to some comments here. Wow, a lot of comments. Holy cow, you guys are busy. Quick question. You didn't go. I did not, Dane. My website was down, so I was working on getting my developers. They're over in the Ukraine, and they didn't get back to me quickly, so I had to set a plan B, and I put up posting on Upwork to find a new developer. But they did get back to me. They're going to be working on it tomorrow morning. My original developer. I want to help them out as much as possible. You know, I can't stand the Ukrainian government, but the people, my heart goes out to them. Mark, hey Bob, Tony from Delaware. Really? Oh, we already read this one. Thank you. You need a Bitcoin miner and use the excess energy to. Yeah, that's a good idea. Joel, what happens to short and long puts when trading is halted on a stock? Well, the time decay continues, right? So the long puts, you're in trouble. The short puts, they'll just expire. If they go under, you want to be short the puts. You want to be short the puts. You don't want to be long. You don't want to be long the puts. If you had a bear spread on, well, your long put's going to you're going to lose 100% of your capital, and you're going to make 100% of your capital on the put that you wrote, and net because you're selling that premium to offset the cost of the long put. So net you're going to realize a loss in the end, but not as much of a loss as you would have realized had you not sold that out of the money put. So yeah, that's the way it works. You've got higher odds of getting struck by lightning than having the futures down on a Monday or Tuesday. Okay. I'm interested in short puts on SLG. I think they're done getting pounded on soon. I think that there's a trade to be had. I'm not sure what SLG. What's SLG? I keep thinking banks here. Sorry about that noise. I hate that noise. Yeah. All right. So this is Realty Corp. We can take a look at the chart. I don't want to kill too much time here right now. We'll go over it later on. Okay. SLG. Done going down. Okay. Just keep in mind, 2 days before SVB went under, they had no idea that they were going to go under. They thought they were capitalized. So just be careful. Powell said that our debt is sustainable, but because we're headed for third worldism right now. I lose complete confidence in him. Not that I have much to begin with in any central banker. Conflict with Iran could get serious fast. Oil could spike. Yes. Market will melt up to at least end of the week and expect volatility second week of April. Yeah, we'll take a look at seasonality. Isn't April one of the strongest? We'll take a look. Tim, we're going to go over seasonality. Off the top of my head, I'm not quite sure. Palace. Okay, we already went over that one. I'm short the banks. I'm short the banks long. What are you? Yoga Mac, you blow my mind. You got it, Joe. Bullets and bullion, yes. Trader Isaac, thoughts on biotech trade? I like the way LABU closed last week. We'll take a look at XBI as well. I wish the premiums were better on LABU. I tried to sell puts on LABU on Friday. They didn't take my bid. I would have moved it up. I just forgot that I had the order out there. So I tried to sell. Where did it close? I think I tried to sell the 4 strike. Oh, you know what I tried to do? I tried to sell the 450, and the shares were just shy of 450. So technically, I was selling an in the money put, but the chart looked so good. I figured it was going to rally, and that would give me a synthetic long on LABU. I never got the fill. I thought it would have been an easy fill. They wouldn't take it. So, and I put it in at midpoint. I didn't try to get a bargain. Okay, let's get to it. All right, we're going to go over stock chart requests in a moment, but I always like to begin with things with a little bit of humor. This is off of Twitter. I would like a wake-up call, please. She's from the Federal Reserve, wants to take over all of your bank accounts and manage them through a social credit score. So it's good to see that this is now becoming mainstream and they're memeing this because it's becoming reality. You have actual documentation. You have a executive order authorizing the Federal Reserve to begin this process, and they're going to be testing effective June. So call your congressman, let them know we're watching you, we see you. They want control, complete control. Now, you know, one thing that we need to, I began this commentary off tonight by saying I'm bullish going into the new trading week. I take it day by day. I could be bearish again on Tuesday. Thursday night, I was bearish, and rightly so. We were down on Friday. We made money on our NVIDIA short. Now you got to see if I'm going to get money out of it, and hoping they don't gap it up on Monday because we bought puts on NVIDIA, and they're profitable. You had a strong rally on the back half of the day. The daily chart looks strong, and the Dow Jones looks good on NASDAQ in particular. QQQ looks good on a weekly and a daily time frame. But you need to keep in mind that the Federal Reserve, I think, has lost control. They had no idea that these banks were about to blow up, and that should cause you a lot of concern. We have children. I'm not saying Jay Powell per se is childlike, but he's not all that powerful. He did not see this coming. And we do know we have, at best, incompetent individuals at Treasury in the White House. And at worst, they're nefarious. These are the nefarious people. And this is what Jay Powell had to say. And I remember him saying this, but I figured I'd play it because he's the guy in charge. Listen to this. This is his comment with regard to the banks going belly up over in California, SVB. Go.
To the financial markets more broadly. That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision. I realized right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen?
Look at that. How did this happen? This is going to cost the American taxpayer billions upon billions of dollars to bail out depositors that we don't have to. It's not our problem. The accounts in this bank had an average account balance of $4 million. These are wealthy individuals who didn't care about FDIC deposit insurance. They kept it all there because that was the place to be. Silicon Valley Bank. That's where Pelosi and that's where California Governor Newsom banks. So why not be there? They ignored their own risk management. Why do we need to bail out these banks? We shouldn't have to. As long as we continue to do this, we only beget more bad behavior and we support mismanagement. These guys should have been wiped out. Depositors wiped out. We've got to clean out the system. It sounds harsh, but we're supposed to be a capitalistic society. Winners win and losers lose. Those losers should have lost, but they're on welfare. They're on corporate government welfare, and we're paying for it. And nobody is coming to my little credit union to bail me out. It's only because they're in Silicon Valley. That bank, their woke culture, they support the woke culture. Signature Bank, same deal. It's all over the internet, all over Twitter. The videos they were putting out there. They donate to the Democrat Party. Therefore, they got bailed out. This was not an act of Congress. So Lord knows what else they don't know about over at the Federal Reserve. Now, this is off of Twitter as well this evening. Biden administration imposes new regulations on air conditioners. They couldn't ban stoves. Think about this. Think about this. We have funding over $100 billion for the Ukraine. That funding supports the pensions of government workers. Literally, this is not hyperbole. It's funding the pensions of government workers over in the Ukraine. I like the Ukrainian people. I hate their government. Why are we spending this money? And what they're doing, this is their priority. This is how bad they are. Their priority is to ban stoves, gas stoves, to ban air conditioners. They're coming after your air conditioner, and this is how they're going to sell it. This is how they're going to sell it. I couldn't believe this. The U.S. Department of Energy today finalized new energy efficiency standards for room air conditioners, commonly known as window air conditioners, and portable air cleaners that will reduce household energy costs and cut pollution. They're going to sell this as a cost, trying to get you not to have air conditioning. DOE expects these standards to save American families. Oh, thank you. Thank you so much, federal government. Please don't do me any favors. DOE expects these standards to save American families and consumers approximately $1.5 billion per year in electricity bills and decrease harmful. It's nefarious. I want it just to be incompetence. This is nefarious behavior. This is that World Economic Forum, that woke cult behavior. They're trying to control everything that we do while they rob us blind. And they're in charge of the economy that is imploding, folks. It's blowing up in front of our faces, and they look at it as opportunity. This is their opportunity to strike and finally kill off whatever was of the American dream. They're coming for it vis-a-vis this. They want CBDCs, a digital dollar, and a social credit system. It's coming. And don't rely upon the Republicans. Economic data last week. Another sign that the economy is slowing dramatically. Durable goods, new orders declined for the second time in 3 months. So transportation equipment also down for the last 4 months, drove the decrease 2.6 billion or 2.8%. The economy is weakening very, very quickly, and this is why the bond market is pricing in rate cuts by the end of the year. And that's why they're going to rally this market. They think that this is going to lead to a new bull market in the stock market in the short term in anticipation of that first rate cut. Yes, they could be right. But history has shown us, I've shown these tables in the past, I should do it on Thursday again. When they pivot, the first time that they cut, that's when the stock market rolls over. So don't think that that first rate cut means the stock market goes ripping up higher. It does not. History does not teach us that. It teaches us the opposite. We anticipate the rate cut, stocks rally, then we get the rate cut. The Federal Reserve is responding to a crisis, and then we get the reaction by the stock market and it moves lower. Why are we also concerned about the economy? these are the borrowings of all commercial banks. Basically, they're going to the Federal Reserve and they're saying, listen, we need a loan to carry us overnight. What can you lend us? Can you take our treasury? Can you take whatever junk assets, take them as collateral, and just give us a loan? Sure, that's what the Federal Reserve is doing right now. And we have hit decades highs. I mean, here's the COVID spike when the stock market collapsed back then. We are well beyond that now. And as for the regional banks, folks, we have surpassed the financial crisis highs times 2. I mean, this is how bad it is. That their liquidity is so weak, and it's only going to get worse. Here's what they want you to believe. Treasury and the White House want you to believe that they have the ability to bail out all these banks. They don't have the ability. They don't have the power of the purse string. Congress has that. They need to go to Congress and get the authorization to do that. Economic data coming out this week. Consumer confidence on Tuesday, nothing tomorrow. On Thursday, we're going to get GDP. That's going to be a revision. Initial jobless claims we get every Thursday. Now, this is an important economic Friday because we're going to get the PCE index. That's the Federal Reserve's favorite inflation index. So believe me, Wall Street is going to be keeping a close eye on that number, and the markets will react if it comes out way too hot. So pay attention to it. We're going to get consumer sentiment, the final revision for March. And we have a bunch of Fed heads coming out this week. So just beware of them being out there and making some lame brain comment that sends the markets ripping up higher or dropping rapidly lower. All right, valuations of the markets are proceeding to the new trading week. We have the S&P 500, 28.36, pretty much unchanged from where we were last Sunday. We are still very far extended from the mean of 17 PE, and the Buffett indicator shows this is fairly valued, yet still historically extended beyond trend. And how much are we? 24.03% beyond trend. So there's room to drop here, all right? I don't think it's going to happen. I don't think so. I think that we're going to get a rally this week. Do we close out the week higher? I don't know. That's just how bad of a situation that we're in. The headline risk that's out there right now it's crazy. It's really scary about these headlines that could come out and really kill a rally. But what I will say is that despite all the regional bank news that's come out over the past couple of weeks, equities have held up really, really well. So I can ignore it, and I can go about doom and gloom, naysaying the economy is going to bomb, it's going to crash, blah, 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 all that hyperbole that everybody on the YouTuber likes to say out there and try to get clicks. I'm not going to do that. I'm not going to do that. I'm going to speak what I see. And what I'm looking at when we take a look at the S&P 500, and again, longer term, I'm bearish. I think we're going down 30%, but not right now. The charts aren't telling us that. I don't have the headline data to suggest that we're going lower right now. The charts are saying we're going up higher, and this is a monthly chart. The month is almost over. Let's start paying attention to next month. Let's be proactive. And on the month so far, guess what? We have a breakout above this upper band of resistance. Momentum indicators are rising. Can this reverse by the end of the month? Sure. But right now, at this snapshot in time, it appears as though we are going up higher. Why else do I say that? Simply take a look. Let's bring up the trip cues. Trip cues, bullish reversal month. And if you want to do a deeper dive on the day, and this is what was really impressive to me, is that you had the Fed announcement last week. They broke and closed the market down below support. But what did they do? They came back. This is because they dropped it because of Yellen. She didn't even have the presence of mind to not speak when Jay Powell is speaking. Think about it. Think about the lack of self-awareness. And she's in charge of Treasury. So we broke down, yet equities bounced back, and we held support. And even if you do a deeper dive, you go into an hourly chart. I went over this with members yesterday. You take a look at the hourly chart of equities, and you could see that you have a wall, a floor of rock, granite at that 307 mark. They try to beat it down, get it through there. Too many buyers. You got a lot of bulls down there. So, I mean, if we break it and we close back down below it, well, then you got to short the market. If we rally up and into a resistance level, you got to short the market. But right now, it appears as though all systems are go, and we're probably going to move up higher, absent a headline, absent a macro headline that comes out. I don't know what it's going to be, but if you see geopolitical risk rear its head, or you see another banco belly up, then you got to worry. But for right now, all things being equal, it looks as though the path of least resistance for equities is to the upside. And even when you take a look at the banks, while still looking weak here, this is the XLF. Stochastics rolling over down below 20. I mentioned this on Thursday night. You're probably going to get another lower low. We did. However, we rallied off the lows of the day. I wouldn't be the least bit surprised to begin to see a rally in the banks, at least in the mega cap banks. Now, the KRE, these are the regional banks. I think they could have a little bit more downside here. Maybe not. I mean, this is the first time looking at the chart this weekend. This is a nice bullish reversal bar on Friday. We may have seen the bottom here, at least in the short term. We're a bit extended intraday, but I'm not going to be the least bit. This is a pretty good close. I'm not going to be the least bit surprised to see these pop up higher tomorrow. Okay, let's finish off some comments here. San Francisco Fed President Daly, zero banking experience, zero risk management experience. She was an inequality researcher at San Francisco Fed who was mentored into her position by Yellen. Yeah, and Yellen is she's the disciple of some left winger out of Yale. I was reading her bio earlier, and it does not provide you a bunch of confidence in her. RB, so how are they expecting low-income families? They don't care. Everything they do, they say that they're for the low income, but who does inflation hit the worst? Low income. Who do the mandates on air conditions, on everything, who do they impact the most? Low income. They hate the low income. They're useful to them for a vote. They're useful to get out to rallies. Otherwise, they despise them. They look down upon me. Don't get me wrong. But low income people, they have a disdain for. A disdain. They just need them. They try to ban those AC units in Florida, and we will. Yeah, I bet. Did Buffett get involved in the bailout? Which bailout? If you're talking about 2008, that he bailed out Goldman Sachs. Goldman Sachs would have went under. T. Burton, Yellen looks scared when she does. She does. Isn't this coming typically seasonally higher? Oh, we're going to look at that, Dane. Trader Isaac, is 300 still a level to watch on Q? I would say 307. Looking at the intraday chart of Qs, I think 307. I am long of the SQQQ. I probably will be stopping out with a loss, and I don't say that, and I'm embarrassed by it. If you're wrong, you should be embarrassed when you don't admit that you're wrong and you let that loss run. I'm probably going to stop out with a loss tomorrow. The upside is this: is that I did my job. I preserved my capital. The key to this game, or taking the line out of Wall Street, is you can't piss in a tall straw with the big dogs if you don't have your capital reserves. So I'll take the loss, and I know that I'll be able to get back in at a better risk-reward entry point. Why fight the market, especially with a leveraged ETF? OG1 Kenobi, hey, how you been, pal? Haven't seen you in a while. Question, can you look at UVXY? My girlfriend owns a lot of shares. Ugh. And wants your opinion. Her name is Susan. Hello, Susan. Yeah, we'll definitely go over it. You got to be careful with these leveraged VIX products. I don't trade them anymore. And the reason why is that they diverge. You have the time decay in them, and they diverge. When I owned, I think it was VIXX I owned, and I couldn't tell you, the VIX would be up by the end of the day. I look at my VIX leverage ETF, it was down. So it constantly happened. Jeff, DBC. Hey guys, hit the bottom. Yeah, please hit the like button, please, if you help me out with the YouTube algo. All right, so let's get to this. First, we're going to go over seasonality. That's been a big question here tonight. So let's go over that first, folks. We're going to be using TrendSpider. If you don't have AI in your charting software, you got to get it. Please, it's a time saver. It helps me out constantly. I use it all the time. You can see I have my setup here, but let's go to the standard view. If my mouse would cooperate, there we go. Okay, so let's bring up, there's a 35% discount code below on TrendSpider. Okay, so let's go over seasonality. Now, the month of April is a very strong month. This goes back 30 years. So the month of April, very strong, as is May. So we need to anticipate, given this is a lot of data, right? So 30 years worth of data, 77% of the times up. Why fight it, right? Let's take a look at a weekly chart and how seasonally we look on the week. This is the coming week. We're up 58% of the times. The following week, we're up 68% of the times. So we are, yes, heading into a seasonally strong period of time for equities. So another reason why we're going to look to lighten up on shorts and let them take the market up higher. Let's use irrational exuberance, if you will. Let them take the market up higher. And once we hit resistance, all systems go to the short side. And when they cut, we know. We got the data. The data shows us that historically when the Fed... What has happened? I don't know if I'm still live. I just lost a monitor. I don't believe this. Power go out? What just happened here? Let me see if I'm still live here. What the heck just happened? Sorry, folks, if you're still watching this, you're watching a poop show. All right, I think I'm getting it back now. All right, yep. You're watching a. Sorry about that. I just lost a monitor. Looks like the power cord came undone at the perfect timing. Okay. Thanks, Pete. Thank you very much, guys. Appreciate it. All right. Let's do chart requests. All right, Coinbase. Let's go to the weekly view first. Now, Coinbase got that Wells notice the other day. They're not the only crypto company that's got it in recent weeks. So I don't think there's anything nefarious there. They're just being victimized by the federal government because they hate crypto. They don't want any competition to the US dollar. So I think that this is actually an opportunity. How do I hide this? They changed this on me here. All right, there we go. Okay. So weekly chart Coinbase closed down on the week. It broke support. That's a little bit of a problem here. Now, if they gap it up tomorrow and they close it above, where did it close? If they close it above 71 bucks a share, I think that's bullish. But you got to wait for the close. Make sure they don't fade it on you. Now, the daily chart not looking good. I want to say good things about Coinbase, but honestly, I can't. Because here's the gap down, obviously, on the Wells notice news. They'll rally it back in an effort to try to recapture support. Do they do it? I don't know. I think that this is a good one to sell premium on. Let's see how much volatility they have pumped into these options. 15-minute chart looks good. They dropped it down. It didn't move all that much for the past couple of days. I think this is an opportunity here. But I wouldn't want to buy the common yet. Not yet. I would rather sell premium. And you're getting your IV percentiles at 50%. So you're going to get paid pretty good premium. You could be kind of aggressive here. I would be anyway. I would go out 45 days, take advantage of that initial time decay. I'd be looking at the 40 strike, 45 strike on Coinbase, and I would just sell puts. But otherwise, I'm not loving the chart right now. But if they sell it off, right at that $45 price point, you have a support level. And right above the $40 price point, you have a support level. I'm liking the 40 to 45 strike. If they have a 42.50, awesome. So Coinbase, I'm probably going to be selling premium on it tomorrow. Members, I'll send out the alert. SLG, done going down. That was the question. Is it done going down? Well, we'll go to the weekly chart first. Now, the thing to keep in mind here, I don't think I've gone over this chart in the past. I did not draw these support levels. This is the AI that does this. Take them off, put them on. We broke support last week. I completely expect for them to rally SLG back up to 21.75. The question is, do they close it back above support? If they do, we don't want any sensitivity. If they do, I would be a buyer. So SLG looks interesting, but I would not be a buyer of the stock right now. Why? It broke weekly support. Daily chart, a new daily lower low on Friday. However, it flashed a bullish reversal bar. I think they're going to take a run at 21.75. Watch for a close above that mark. If it closes above that mark, I think that you could put on a speculative bet here. Just understand the reasons why the stock has gone down. I don't. I can just look at the chart. I don't understand the reasons why. I can only assume that it has something to do with the banking sector and rising interest rates. XBI, Trader Isaac. Yeah, this is looking interesting, at least on a daily time frame, weekly time frame as well. Take note of the Bollinger Bands, which are now beginning to widen out. As a matter of fact, we had a TTM squeeze set up here a few weeks ago. It didn't play out to the bull side; it played out to the bear side. But you do have on this weekly chart, you have monthly resistance immediately above. So just be aware of that. I wouldn't be a buyer of the XBI until it closed above resistance. It's got to close there. We don't care if it trades there intraday. It must close there. Now, again, we have resistance immediately above. Just be aware of it. I wouldn't be a buyer right here, right now. But if we close above resistance, game on to the long side for XBI, LABU. LABU is looking good here. It's a daily chart. Let's begin with the weekly chart in keeping with our best practices. Okay, we held support last week, and this is why I wanted to sell premium right at that 450 strike. And I'm going to try again tomorrow. We already have a long position here. It's not a big long position, but it's a long position. So I would like to get more long at these levels. So we're probably going to do it tomorrow. I'll try to sell premium. Daily chart looks pretty good. Bullish reversal ball. We closed back above support on Friday. I'm liking the biotechs here, LABU in particular. Dane, quick question. When buying, selling options on Thinkorswim, what is the difference between current IV percentile and IV percentile? All right, so the current IV percentile, it's very confusing, and a lot of times they simply match up anyway, but there are folks out there that make a good argument that you should know the difference between the two because at times it becomes night and day. And okay, I'll defer to them. I haven't done the analysis. So current IV percentile is the current IV percentile where the IV is on a 52-week basis. Now, the implied volatility ranking is more so on a historical basis. So I use the IV percentile more often than not, and it works out for me just fine. And I do validate, like, I like to use both. This is going to take forever to open up here. I go on to the same guys who built TOS, Tom Sosnoff, also built Tasty Trade. So very similar data, coding anyway. Completely different look. This is more gamified. So if you take a look at, let's bring up Coinbase. So IV rank here is 48.5. Okay. So even though it's a different metric, current IV percentile is at 50%. So they're fairly consistent. So otherwise, I just know to sell premium. I'm not an expert on how it's calculated, to be honest with you. So I want to put that out there. I'm certainly no expert when it comes down to that. Why are my screens looking so wonky? Okay, that's better. Wow. Okay. Uh, yes, Bob. SLG is New York's. Oh, boy, that's a bad business to be in. Very bad. Yeah. Very bad spot. Okay. Yeah. So I would avoid that like the plague. Um, I mean, you have unfriendly government. You have, I mean, it's the worst. These are just bad people. They're just bad. Okay. Let's go over UVXY. Now, I just said I think the equities are going to move up higher here. So therefore, I believe this is the bull ETF. Is this a bull ETF? Let me. Yeah, so this is a leveraged ETF putting you long of the VIX. Now, to be honest with you, it's not a horrible looking weekly chart, which is why I wanted to validate it. It's not horrible. And I'll tell you why. We have broken out. Check that box. And we are having a fairly orderly pullback. Momentum is building, and this is a weekly chart. It's not insignificant. There's momentum is building as measured by the stochastics. Even though we're down a couple of weeks here, momentum is building on the UVXY daily view. It's in no man's land. It's in a trading range. And we had a bearish reversal bar on Friday. We're probably going to tap this lower band of support again. And if it rallies, we're going to rally up to initially $6.97, then up to around $7.52, then $8.13. I'm torn on this. It actually looks like a not bad chart, absent Friday's price action. But I'm worried that the bullish chart of the S&P 500 and the Qs are going to trump this chart. So I would not be adding to this position. And I don't know if they have premium you could sell against this covered calls, but that may be another option, pardon the pun, that you may want to consider. At least it'll offset the time decay, even if you go deep out of the money. DBC, this is the ETF putting you long of agriculture. An inside bar last week. It's the first indication that we may have stopped going down here. We are still in a downtrend channel. Let's go to a daily view. Daily view, we're flirting with a resistance level immediately above at $23.13. A close above that mark would put a buy on this. Right now, I would wait and see whether or not we close above $23.13 the share, and then I would look to put on a trade. Momentum, as measured by Stokes, rising. We have three more I'm going to go over here. Four more. AGNC. Not well. It's at a support level. I guess if you're looking to get long here, you could scratch the itch, but I wouldn't be a buyer until we close back above $10 per share on AGNC. But we are at a support level. I think it's worthy of nibbling here. Use a tight stop right below last week's lows. We break those lows, you're out with a small loss. But I would not add until you close above $10. Boeing, flirting with resistance levels here. A down week last week. It bounced off the 21-period exponential moving average. Stokes are going in the wrong direction. They're losing momentum. Daily view. We held support. If you're going to buy this, use the tight stop right below Friday's lows. Look to trade it up to $203.50 per share. I would be out and look to see whether or not it could break out. Then I would re-enter on the breakout. Last one up, OKTA. Broke weekly support last week. You got to avoid this. Bearish. You got to avoid it. Very long in the tooth on stochastics. They're beginning to roll over. Daily view. Rejection at multiple resistance levels above. I would avoid this. I wouldn't short it, but I wouldn't buy it at all. I would sell it. Folks, that's it. Everybody have an awesome trading week, a profitable trading week. Thanks for being here. Like, subscribe. You know the deal. Thanks all, and have an awesome trading week. Talk to you soon. Be well.